Welcome back to Investing Talk Podcast.
Today we're looking at CleanSpark. And, if you've just been scanning the headlines, you probably think we're about to talk about Bitcoin mining for the next 15 minutes.
Hash rates and difficulty adjustments. Yeah.
Exactly. But the research we've got in front of us, it suggests something much more complex and honestly, potentially much more lucrative is going on here.
Okay.
We're looking at a company that's in the middle of this high-stakes pivot into AI infrastructure. They're essentially trying to leverage just massive power capacity in Texas to solve the global compute shortage.
As usual, before we start, subscribe, like, and comment to this video to support the show. It really helps the algorithm find us. Okay, so let's unpack that AI infrastructure narrative right away.
Let's do it.
Because it feels like everyone, and I mean everyone, is claiming to be an AI play right now. If you have a server rack and a pulse, you're suddenly an AI company.
Is the new buzzword?
It is. So the real question we need to answer today is whether CleanSpark is actually building a legitimate data center business, or are they just a miner riding a huge hype wave to, pump the stock?
That is the billion-dollar question. It's the core tension of this entire story. But the reason this company matters right now, why we're looking at it on February 2nd, 2026, is the execution.
Okay.
They aren't just putting out slide decks. I mean, they are actually moving earth in Texas. They're taking what was a pure-play crypto mining operation and turning it into this dual-engine beast.
So you have the cash cow from Bitcoin mining on one side.
Right, and then this massive emerging growth engine from high-performance computing on the other.
It's a mutation then. They're trying to evolve from a miner into something like a hyperscaler.
That's a great way to put it. They're trying to become a utility provider for intelligence.
Well, that sounds great on a bumper sticker, but moving earth and making money are two very different things. Let's see if the numbers can back that story up.
Let's get into the fundamentals. The growth trajectory here is, frankly, it's undeniable. If you look at the full year for 2025, CleanSpark hit revenue of $766.3 million.
And just for context, what does that represent in terms of growth?
That's over 100% year-over-year growth.
Yep.
They basically doubled the size of the business for 12 months.
Doubling is impressive, sure. But, with these crypto-adjacent stocks, you can have one great quarter that sort of masks a slowdown. Was this all early in the year, or is it accelerating?
It's accelerating. Just look at Q4 of 2025. Revenue surged 150.5% year-over-year. It hit $223.7 million.
Wow.
And here's the kicker. Unlike a lot of these growth tech companies that just burn cash to get that top-line number.
Right, grow at all costs.
These guys are printing money at the gross level.
Yeah.
They posted a gross profit of $486 million. And the EBIT margin, so earnings before interest and taxes, is sitting at a staggering 80.6%.
Hold on, let's just pause on that number. An 80.6% EBIT margin. That's frankly unheard of in most hardware businesses.
It's huge.
If you're making cars or phones, you're happy with 15%. That number suggests their cost of production is just incredibly low. How are they doing that?
And that brings us directly to the moat. In this industry, your moat isn't your software or your brand, it's power.
Okay.
Specifically, low-cost, reliable, massive-scale power. And CleanSpark has proprietary access to power in EarCore at the Texas grid. They recently acquired these huge tracts of land in Brazoria County, Texas, and they're building a regional power hub there. We are talking about over 890 megawatts of aggregate potential capacity.
Let's just, for anyone listening who might not be an electrical engineer, let's put 890 megawatts into context. That is, roughly enough energy to power a medium-sized American city?
That's about right. It's a staggering amount of juice for one company to control.
Right.
And in 2026, power is the bottleneck for AI. Everybody's got the chips. Nobody has the plug. CleanSpark controls the plug.
I have to play devil's advocate here, though. Building out 890 megawatts of anything isn't free.
Of course not.
You mentioned the revenue is great, but when I look at the projections for 2026, I see an earnings per share contraction. Analysts are projecting EPS to drop by, 39% this year? That doesn't sound like a growth story.
It sounds like a company spending money faster than it makes it.
Exactly.
And that's a fair call out, but you have to look at why the EPS is contracting. It's not operational decay. It's a CapEx cycle.
A CapEx cycle.
They aren't burning cash on marketing or bloated salaries. They just raised $1.15 billion in financing. That money is being poured directly into concrete, into transformers, into substations for that Texas expansion. It's a classic invest now, harvest later kind of setup.
So you're saying the EPS drop is just the construction bill coming due?
Precisely. It's the cost of buying the lumber to build the house.
Mm-hmm.
And while they're building that future, the old business is still humming along. In December 2025, just a couple of months back, they mined 622 Bitcoin.
Okay, so still productive.
And that was up 10% year over year.
Mm.
So the mining side is still growing, still generating cash, which, helps fund this big pivot into high-performance computing.
That's an interesting duality. Usually a company pivots because the old business is dying. Here, the old business is actually paying for the new one.
And they're not just building generic warehouses. They've partnered with a company called Submer for modular data centers. This is really important because it lets them use immersion cooling technology.
For all the heat those chips throw off.
Exactly. When you run high-density AI chips, they get incredibly hot. Submer lets them scale this infrastructure way faster than a traditional build-out.
Okay, so the story is, spend $1 billion now, build a power empire in Texas, use advanced cooling, and have Bitcoin pay the electric bill in the meantime.
That's the narrative.
It's a compelling one. Let's pivot to the charts to see if the price is telling the same story.
Let's do it.
All right, looking at the price action, CleanSpark is trading right around $13.71. And if you zoom out a bit on the weekly chart, you're looking at a classic V-shaped recovery pattern.
It got pretty beaten down late last year.
It did, but it recently broke above a really critical resistance zone.
That $12 to $13 level was a ceiling for a while.
It was a concrete ceiling, and it smashed right through it just after the news dropped about that Texas land deal. That was the catalyst.
No question.
But, listeners need to understand the personality of this stock. It has a beta of around 3.47.
Okay, for those who don't speak finance nerd, maybe break that down.
It just means it moves about 3.5 times as much as the general market. So if the S&P 500 sneezes, CleanSpark catches the flu.
Or in a bull market, it's a rocket.
It's a rocket. It is highly volatile. This isn't a stock you buy for safety, you buy it for velocity. Right now, psychological support is sitting down near 1184. As long as it holds that, the breakout is intact.
What about the volume, though? Is this just, retail traders on Reddit hyping it up, or is there real money behind this move?
That's the interesting part. We're seeing what we call whale alerts in the options market.
Define whale alert.
It means we're seeing these massive block orders for call options. These are essentially big, big bets that the price is going to go up.
It's not $500 trades.
No, these are $1 million positions. And the average daily volume on the stock itself is over 34 million shares. That's not just retail. That is heavy institutional accumulation.
So the big players are getting positioned.
They are. And the setup is pretty compelling because even with this recent rally to 1371, the stock is still trading at a significant discount to its 52-week high of 2361.
A lot of room to run then.
If the momentum holds and if the story stays clean, there is a lot of room for it to revert to the mean. A lot of open air above it.
The charts look active, but let's see what the street is saying about all this construction down in Texas.
Yeah, good point. Price is one thing, but sentiment is another. Is the market actually buying this whole AI pivot story?
Well, I ran the numbers through our sentiment analysis, and the quantitative score is coming in at a bullish 71% positive.
Okay, so pretty strong.
It is. And the news cycle isn't talking about Bitcoin crashes or regulatory fears anymore. The headlines are all AI expansion, Texas land deal, and those whale alerts you just mentioned. The narrative has completely shifted.
Who's driving that narrative on Wall Street? Is it just the usual crypto-focused boutiques?
The heavy hitters are lining up. You've got John Todaro at Needham. He's got a buy rating on this with a $25 price target.
That's nearly a double from here.
It is. And Needham is usually pretty sharp on these infrastructure plays. They really understand the plumbing.
They do.
Then you got Maxim, also with a buy rating and a $22 target. But the one that really caught my eye was JP Morgan.
Oh.
They have an overweight rating, but they specifically cited AI inference use cases at the Texas sites. That's real validation.
That is significant. JP Morgan is usually the conservative voice in the room. For them to specifically call out inference, which for our listeners is the running of the AI models, not just the training, that means they believe the infrastructure CleanSpark is building is viable for top-tier tech clients.
It's a stamp of approval from the establishment. And if you look at the consensus, there are 11 analysts covering it with a strong buy consensus. The median target is 2250. So the street is expecting a big move.
And it's not just analysts talking. It's funds buying, the so-called smart money.
Right. We saw funds like Voleridge, Dimensional, and Tudor all increasing their positions recently. Institutional ownership is sitting around 43%. That provides a bit of a floor under the stock.
Yeah, it's not just loose hands holding this paper.
Right. It adds a layer of stability to that high beta you were talking about.
However, it can't all be green candles and bank upgrades.
I knew this was coming.
Let's look at the risks, because there are a few red flags here that we need to unpack.
Always the skeptic. Go for it.
Risk number 1, insider selling. In December 2025, just a couple months ago, 2 directors, Amanda Cavallari and Thomas Leawood, they both sold shares. So if this Texas deal is the opportunity of a lifetime, why are people in the boardroom selling?
Okay, I looked into that.
Yeah.
And while it never looks great on the surface, you have to consider the context.
Which is?
They just did a massive capital raise.
Yeah.
So often insiders will sell for tax purposes or just to rebalance their own portfolios after a big dilution event like that. It's worth noting, insider ownership is still material. It's about 2.65%. They still have a lot of skin in the game.
Okay.
I don't think they're fleeing a sinking ship. I think they're paying their taxes.
Fair enough. But let's talk about that capital raise. That brings us right to risk number 2, dilution and debt. They raised $1.5 billion using convertible notes. That's a lot of paper.
It is. It's a war chest, but it definitely comes with a cost.
And there's this mechanism in there called the conversion floor. The notes convert at $19.16. And here's the danger. If the stock stays below $19.16, that money is just debt that has to be paid back with interest. But if the stock goes above $19.16, those notes convert into shares.
Which means the pie gets cut into more slices.
Exactly. Existing shareholders get diluted by roughly 27.5%. That's a massive chunk of the company to just give away.
It's a significant overhang, I agree. But you can flip the logic on that.
Yeah, so.
It also incentivizes management to get the stock price well above 1916 so that debt just wipes off the books. It aligns them with growth, even if it comes at the cost of some dilution. They need the stock to perform to clear that balance sheet.
Okay, but that growth hinges on execution. And that is risk number 3, and for me, it's the biggest one. This is the show-me risk. They have the land, they have the power permits, but where are the customers?
That is the missing piece of the puzzle.
They have not announced a signed, definitive contract with a major hyperscaler. We haven't seen a press release saying Microsoft signs a 10-year lease, or Google is taking 100 megawatts.
Nothing concrete yet.
So until a tenant actually signs on the dotted line, all of that AI revenue is theoretical. It's a spreadsheet model, not a bank deposit.
You're right. And on top of that, they're still tethered to Bitcoin. If the price of Bitcoin crashes tomorrow, their the whole mining operation, it just dries up.
And if that dries up, they might not have the cash flow to finish the data centers before any AI revenue can kick in.
It's a tightrope. They're walking between 2 very volatile industries.
Exactly. It's a race against time. Can they build out the AI infrastructure and land a tenant before the next crypto winter hits, or before the AI hype cycle itself cools off?
Okay, so we've weighed the growth against the risks. We've looked at the billion-dollar bet in Texas versus the insider selling and, the lack of a signed contract. Let's score it.
What's the verdict?
I'm giving CleanSpark a bullish score of 8 out of 10.
An 8. That's pretty high given the execution risks we just laid out.
It is aggressive, I know, but here's the thesis. CleanSpark is an asymmetric bet. Right now, at $13.71, you're basically buying a highly profitable, massive-scale Bitcoin miner at a discount.
Okay.
That business alone pretty much supports the current valuation. But on top of that, you are getting a free call option on them becoming a massive AI infrastructure player.
So the market isn't fully pricing in the Texas expansion yet?
Not at all. Not until those contracts are signed.
Yeah.
You're buying the miner and getting the data center potential for free.
Interesting.
And just look at the valuation. It's trading at a discount to its peers. The upside to just the analyst consensus of $22.50 is over 60% from here. And if that blue sky scenario hits, if they announce a big contract with a hyperscaler,
The one we were talking about.
the target moves to $30, and it moves there fast.
So what's the time frame for someone listening? Is this a day trade, a swing trade?
No, absolutely not a day trade. This is a multi-quarter hold. You need to be in this for the next 6 to 9 months, I'd say.
What are you watching for?
2 specific things. You're watching the Q1 earnings report to make sure the mining business is stable. But more importantly, you are waiting for that press release, the one that announces a tenant for the Texas facility. That is the catalyst that re-rates the entire stock.
So patience is key here. You're really betting on the management team to close that big deal in Texas.
Ideally, you scale in. You don't have to buy your full position all at once. Buy a starter position now, and if they execute, you add more. But the risk-reward ratio here is one of the best in the entire sector right now.
A profitable miner with a billion-dollar AI lottery ticket attached. It's definitely a fascinating setup.
It really is. And it's one of the few places where crypto meets AI isn't just a buzzword. It's an actual construction project with real dirt being moved.
Before we go, here's something for you to chew on. We talk about power as a moat, but as these AI models get bigger and bigger, the U.S. power grid is actually maxing out.
It's a real problem.
It is. So if CleanSpark actually succeeds here, they aren't just a landlord for servers, they become a critical utility provider for the entire digital age. In a world that's starved for energy, the company that owns the outlet is king.
We will be watching that newswire for a tenant announcement very closely.
If you want to track this pivot with us, make sure to subscribe, like, and comment to this video to support the show. We'll see you in the next one.